The following is a sponsored program paid for by First Alliance Credit Union. Welcome to Good Money Moves, featuring Jenna Taubel from First Alliance Credit Union and Andy Brownell. Here's Andy Brownell on Rochester's News Talk, 1340 KROC AM and 96.9 FM.
Welcome to Good Money Moves. I'm Andy Brownell, and I am with Jenna Taubel, AVP of Marketing with First Alliance Credit Union. Hi, Jenna.
Hey, Andy.
Last time we got together, we talked about the importance of teaching kids to make good money moves and some tips on how you can do that.
Yeah.
What are we covering today for Good Money Moves?
Yeah. So today we're digging into a very important question that I think most of us have had to face when it comes to making good money moves for ourselves. And that is the question of, when does it make sense to use your savings to pay for something? And when should you borrow money or take out a loan to cover the cost of something?
Yes, excellent topic.
Yeah, and there's a handful of factors that really play into this decision. So it's, the intent of your purchase, thinking about, is it a need or a want? The amount of money that the purchase is going to take, right? There's a difference between a mortgage and buying a new washer dryer set. Both feel very expensive, but they are very different prices. Also, you have to think about some of the long and short-term kind of implication of each option. And then, of course, kind of thinking about what your current financial position is and what your ultimate goals are for making this purchase. So we're going to be really digging into all of this and each of these areas to really help you, our listeners, better assess when they should be tapping into that savings or using a loan to make purchases.
Yeah, and sometimes you don't even have that choice, right?
Yeah. Sometimes it's dictated for you.
Yes.
And we will talk a little bit about that too.
Oh, okay. It's an excellent topic, that's for sure.
Yeah.
And something we've all faced at one time or another. So when we're thinking about the savings sides, I've got this money sitting over here. Should I be tapping into that? What sort of things should we be thinking about when we make this decision?
Yeah. So first, let's just define what I mean by savings. So I'm talking about that portion of income that you set aside for the future rather than spend it immediately, right? It's really that concept overall of savings, right? Really embodies the idea of delayed gratification, where you kind of sacrifice immediate spending in order to build a financial cushion for future needs or future goals. So, and this is important when we're talking about this because there's a purpose to your savings. It's not just there to be there, right? So, which is why you tend to save for different purposes for your finances too, right? It can act as a safety net, providing like a nice financial buffer in case an emergency happens, like a medical expense or car repairs, or you lose your job all of a sudden. That savings can act to really help you meet long-term financial goals like home ownership, a down payment for a house, helping finance education sometimes. Retirement is a huge one that everybody needs to be savings for. Or if you have plans to start a business someday, you need to have a healthy savings account before you start a business. But savings also really provides that financial freedom and flexibility, really enabling you to make choices and even seize opportunities when they happen. And whether it's pursuing, further education, career changes, travel, whatever that may be, right? So savings has a purpose. Its purpose is to be used eventually.
Sure.
So, and I think a lot of people get nervous about using their savings for things, and it's understandable. But there is benefit to using your savings to make purchases, and it's really kind of comes down to three things. So, number one, if you are choosing to use your savings to pay for something, you're not paying interest.
Yay.
By using your savings, you avoid the burden of interest, the charges, any fees associated with like paying back on a loan, right? Or using a loan or a credit card, really. And ultimately, this does translate into more money in your pocket in the long run, even though you may be foregoing the interest you'd be earning on that savings money over time. You're not paying that interest, which is usually
Right.
much more than what you're making in a savings account. So you're not having to pay on that for a long time, which does lead to you not having such expensive money. And then avoiding those interest payments altogether also allows you to allocate those funds you would have used on paying back that loan and paying down that interest towards other priorities for yourself. What using your savings also does for you is it helps create financial independence. So relying on savings for those purchases really helps to preserve your financial independence. And because instead of being constrained by the debt obligations or repayment schedules, you have kind of retain actually more control over your financial decisions, your assets, because you have one less variable in your financial life to manage because you didn't take on additional debt to make whatever the purchases that you're thinking of. So, and third and final, it offers a ton of peace of mind, right? When you use your savings for purchases, you're really fostering peace of mind, and which then kind of reduces long-term financial stress, which we've talked a lot about on this show before. So knowing that you have the necessary funds readily available to cover expenses that come up actually instills in you a sense of security and confidence in your overall financial situation. So overall, using your savings for purchases, it not only saves money on interest, but it also really preserves your financial independence in the long run, and it ultimately helps promote your peace of mind. So it's actually considered a responsible and sustainable approach to managing finances, thus kind of ensuring stability both in the short term and the long term when you can rely on using savings to make bigger purchases in life.
Okay, that's all settled then. We're done with the program. Sounds like I'm going to go with the savings. It all sounds perfect to me. Okay, so why would I ever look at the loan situation?
Yeah. So, and there are a lot of different types of loans that you can utilize based on what it is that you're trying to accomplish or what financial goal or obstacle sometimes you're trying to overcome, right? So, I mean, there's personal loans, there's credit cards, there's home equity loans, and those can really be used for just about any situation. And then there's the more special purpose loans like auto loans, mortgages. They have a very specific purpose that you're using them for. So utilizing loans for purchases actually does offer advantages as well. It provides really good, quick access to money when you don't have it. So loans can often provide you with that really quick access to any needed funds, which then enables you to make a purchase without having to spend months and months and months accumulating that savings. If something comes up and you're not prepared for it, you don't have that savings. Sometimes you just need that loan. And rather than let your financial life fall apart, you're better off taking out a loan. So, and it's particularly beneficial in really urgent expenses, right? Emergency medical bills, home repairs, maybe they're even on the positive side, really unexpected business opportunities present themselves for business owners sometimes. And it's like, well, I don't have the savings for my business to make this feasible, but I need to do this or I'm going to miss out on a really big opportunity, in which case you can get business loans to help further the growth of your business in that way. It also helps because you're able to spread the cost of something out over a period of time, right? So, which for a lot of people can actually ease the financial burden associated with really large purchases. I don't know about you, Andy, but there's no way I was ever going to save up over almost $200,000 to buy a house when I bought mine 13 years ago. Wasn't going to happen.
Well, so same thing with vehicles too.
Exactly. So, I mean, some people are very blessed and they are able to do those things. I am not, and most people are not in that position. So that is where being able to acquire those assets, which you do need for just regular life, to acquire those and make it financially feasible for you to do so, because you're then not having to completely deplete your savings or In some cases, you still can make a very significant upfront payment, which is called a down payment. And that's actually a good thing because you're financing less of it, right? But then you can kind of manageably make monthly installments and really align your expenses with your paycheck a lot easier.
Yeah, and there's an argument to be made too that, and those big ones, right? Especially the home or that vehicle that's going to provide you the transportation to and from your job that allows you to have the money that you have. That
exactly.
It is a asset that's going to be used over a long period of time as well.
Correct.
So splitting up the cost of it over that time period is a good way, the word is manage, to manage the finance side of it.
Yeah, exactly. Yeah, and I think then really the third kind of big advantage that utilizing a loan and borrowing funds helps with is building a positive credit history. Because having the loan and making timely repayments is what demonstrates on that credit history, on that credit score, the financial responsibility and reliability to any creditor, thus improving your access to credit in the future. And the thing with this is, even if you never needed to take out a loan, let's say you had cash on hand, you're just rolling in it, you never needed to take out a loan for anything, you never needed credit cards, there are still situations where you have to have a credit score that have nothing to do with borrowing money. There are jobs that require you to have certain credit scores in order to get them. Oftentimes, if you want to rent an apartment, you have to have a decent credit score. Certain utility companies will check your credit score. So even if you don't
insurance
companies, even if you don't want to have to worry about loans and credit cards and you'd rather just live that cash life, you still want to have some experience working with it so that you do have some kind of credit score, because it is used more and more frequently outside of just lenders. And again, that good credit history really opens doors to better loan terms, lower interest rates, saving you even more money over time when you do have to rely on credit and loans. And it also provides you access to a broader range of financial products and services in the future, right? You're not going to get a mortgage or a business loan if you have no credit history. You're just not. So if those are long-term goals of yours, you have to start using loans strategically and pay them down strategically to build that score to get to a place that's going to help you meet some of these longer-term goals. So really, leveraging loans for purchases not only provides that immediate access to funds and can help really make certain things like auto loans, like mortgages, homes, more affordable by spreading out those payments over time. But it also really just offers an opportunity to enhance and really establish your credit score, thus kind of paving the way for some future financial success down the road.
Make another good money move, in other words.
Yeah, exactly.
All right. We're talking about pondering when to use savings or a loan to cover a major purchase and to manage your finances in a smart way on Good Money Moves. And we'll return and talk some more with Jenna Taubel with First Alliance Credit Union in just a moment on News Talk 1340 KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340 KROC AM and 96.9 FM. We're talking Good Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340 KROC AM and 96.9 FM.
It's Good Money Moves. Jenna Taubel with First Alliance Credit Union. I'm Andy Brownell, and we're talking about when to use savings, when to take out a loan to deal with the things that come up in our lives. And we talked about both the savings and the loan parts of this equation. What other factors are out there for us to consider, Jenna, when making the decision?
Yeah, so when you're thinking about whether to use your savings or a loan to make a purchase, there's several kind of key factors that come into play that you need to be thinking about. So that includes things like interest rates, repayment terms, your risk tolerance, and your future financial goals. So when I talk about interest rates, loans have interest that you pay, and we talked a little bit about this earlier, and savings has interest that you earn. So comparing the cost of borrowing through a loan with the potential return that you could get on your savings through the interest rates that you'd be earning, right? You can start to kind of determine whether it's going to be better for you to use savings or to take out a loan, right? In the long run, you can do those calculations. So if the interest rate on a loan is lower than the potential return on the savings, right? And thinking compound interest here, borrowing might be favorable. However, if the interest rate on the loan is higher than the potential returns you would get on a savings, using those savings might be the better option to really avoid unnecessary interest costs from a loan.
Sure.
Right? So it's kind of weighing those out. That's one component. So the other thing to be thinking about is the repayment term. So understanding really the impact of a potential loan and the length of that loan, that's what we mean by terms, on your monthly budget. This is a big consideration. Can you easily afford a $300 payment for 3 years, or, would that be a stretch for you? Right? And thinking too that longer term loans typically do have lower monthly payments, but they might have higher interest costs over time. Whereas shorter term loans can lead to higher monthly payments, but can save money on interest in the long run. So thinking about those things and how that's going to impact your budget is a huge part of making the decision on whether or not to take out a loan or to maybe dip into your savings for something.
Okay.
So the next piece to consider is your risk tolerance. And some people may feel more comfortable using savings to make purchases because they prefer to avoid debt at all costs, or vice versa. They're afraid to use their savings because of the unknown, and so they take out loans when they maybe don't need to. So again, others might have that higher tolerance for debt and view loans as a more strategic tool for achieving your financial goals, which they are. They're a financial tool. And you really have to just start to understand your own personal comfort level with debt and financial stability that comes from having savings available to you when you're making this decision, right? I mean, because you do have to think about it. If you were to lose your job and you depleted your savings versus taking out a loan,
Yeah.
where does that land you? Or vice versa, if you lose your job, you're still on the hook for any payments owed if you take out a loan. So you have to kind of weigh and balance those a little bit. And this is something people do almost unconsciously, but it is part of the decision-making process, right? That level of comfort with taking on more debt or having less in your savings.
But as you pointed out, it's really important to think about it because a lot of times it's an emotional response.
It is 100%.
It's a knee-jerk response, and if you actually take the time to consider it and weigh the options, you might come up with a better answer.
Yeah, and that's where I think talking about goals comes into this conversation, because is what you're planning to spend money on part of your long-term goals or something that came up unexpectedly? So, for example, if a purchase that you're thinking about making aligns with your long-term goals, such as saving for a down payment on a house or retirement savings, right? You've been actively working towards using those funds for those purposes. Use the savings. That is the preferred option to avoid taking on additional debt, right? If you think about those scenarios. Or if you have an emergency fund and an emergency comes up, use that money. That's what it's there for. That's what it's there for.
Yes.
So, however, if a purchase comes up unexpectedly, or it becomes necessary to really enhance your future earning potential, right? And that's where you think about things like you need a car to get to work. So just take out the loan so you can get where you need to be and continue to earn income for yourself, right? Taking out the loan in that case is the better choice. So that's where you have to start to kind of balance some of that out as well. So there's no necessarily one right answer to this decision-making process. And it might even change each time you're considering using a loan versus savings, right? So thinking through all of these things are things most people are already doing, but sometimes it really helps to take a step back and go like, okay, what am I actually trying to accomplish here? And is this something I was planning on doing, or is this something that came up unexpectedly? And really thinking through, okay, is the loan going to fit my budget now? Or if I use my savings, am I still going to be in an okay spot to reach my other goals that I have in mind that I've been planning to use this savings for? And you have to just kind of weigh all of that out while making this decision.
One of the examples I was thinking of when you were describing the future goals situation is I've been through this myself. I have this vehicle and, it's really run its life. And I have this savings for something else set aside over here. But this vehicle is nickel and diming me to death.
Yeah.
And when you say nickel and diming nowadays, it's, 400 here, 600 here.
Yeah.
$1,000 here. And then you look at, that's more than a de facto car payment at that point.
Yeah.
If you budget it out and look at it, and that's where all these pieces can kind of fit together, and you look at a long-term situation, the right decision in that area might be get the loan at that point. Exactly. And minimize your risk of this vehicle completely failing despite the amount of money you put into it.
Exactly. Yeah. I think we had a whole episode about making this choice, this exact decision before. Yeah.
And I'm thinking this is where First Alliance comes in wonderfully by if in one of these, I don't know, the term quandary might be the right descriptor for it, and come in and talk to somebody and say, this is the situation I'm facing. What do you think?
Yeah, absolutely. We help people make those choices all the time. We have people all the time too who will apply for a vehicle loan and then decide, actually it's going to be more advantageous for me and my financial situation to just fix my car. And so they do that instead, right? I mean, it goes both ways. And so again, that's the tough part about talking finances. There's so much nuance that goes into each decision, and it's so unique to each individual situation.
It depends, right?
It depends. Well, yes.
All right. This week we're talking about making the decision of taking out a loan or tapping into savings to deal with whatever we're dealing with in life as far as our financial plans are concerned. It's Good Money Moves. And we'll be back in a moment on News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM. We're talking Good Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340 KROC AM and 96.9 FM.
Welcome back. Good Money Moves this week. Should I take out a loan or should I use my savings? How should I pay for these big ticket items or situations that come my way? And we've talked about a lot of different factors, Jenna. Is there anything else that our listeners should know when they're considering whether to use savings or get a loan?
Yeah. So the last thing I would say is that typically you have to use a blend of these two options. So most people will use some savings as a down payment for larger purchases and then finance the other portion. Like this is really common when it comes to like buying a new car or home, right? Most people end up using loans for emergencies and unexpected expenses and typically use savings for things that they've been planning for. Sure. It's just common, right? However, if you have a well-funded emergency fund, you may be able to cover more unexpected expenses with your savings versus using a loan. So I think it's just important to remember that loans really are financial tools that you can use to meet your goals, and they can still provide financial stability. Loans really become the bad guy in the situation. They become an issue only when your debt load that you've taken on is more than you can afford. So by making smart choices about when and why you're using a loan, you can actually set yourself up for a really solid financial future regardless of how you funded it. And think about too, right before the break, we said if you deplete your savings to make a purchase and you lose your job, you have nothing to fall back on. If you overburden yourself with credit card debt or loans for whatever the purpose and you lose your job, you're still on the hook for that. So either way, you should have savings built up. That's always important to have. And you should use loans in a smart and really strategic manner, right? Make sure that you're not using debt and credit unwisely, and so that it doesn't become a burden. If you use it smart and you're smart about when and why you're tapping into either one of these options, you're making good money moves at that point. If you're putting some thought and consideration into the here and now and the long-term picture.
Have a plan.
Have a plan.
Have a budget.
Have a
First
budget.
time this program we used the word.
Hey, we got almost to the very end of the show.
It's always great information, Jenna, and this topic especially is really important because I think it is something that everybody runs into at one point or another. Mm-hmm. If I'm looking for more information about loans, interest rates, repayment terms, savings, how different types of savings, different strategies, all of this kind of stuff, I'm sure you can help us find it.
Yes, I always encourage our listeners to visit our website, firstalliancecu.com. You can subscribe to our blog. We release new financial tips and advice there every week. You can listen to past episodes of this show at firstalliancecu.com/podcast or on krocnews.com. You can also subscribe to Good Money Moves on Apple, Google, and Spotify podcasts. And if you love our show, please leave us a review on your favorite podcast platform. And of course, if you have a financial topic or a question that you would like covered on Good Money Moves, you can send me an email at marketing@firstalliancecu.com. And of course, I strongly encourage you to reach out to our team at First Alliance Credit Union. They are here to help you start making good money moves today.
That's First Alliance Credit Union, federally insured by NCUA and an equal housing lender. Jenna, thank you again, and we'll chat again next week.
Absolutely.
It's Good Money Moves right here at News Talk 1340 KROC AM and 96.9 FM.